So looking at vol, realized vol drifted lower this week in both major assets. BTC down to about 40%, Ethereum down to 48% on a 10-day realized. Implied vols followed suit, particularly in the weekly expirations. So that's the pure gamma buckets that people are trading. They lost about 6 to 7 vols in both indices. But then if we look at 1 month, it was a bit more stable, only losing sort of say a couple of vol points. Vol carry is a small positive in Bitcoin right now at about 2 vols. See that here with a small positive. But then we've got the negative 6 vols for Ethereum, which is basically saying Ethereum realized vol is a good 6 vols over implieds. So implieds just keep getting hit from the flows, from the selling flows, but the thing's actually been realizing okay. So if anything, as a vol player, you're thinking Ethereum gamma is good value right now versus what it's been doing. Okay. But now, we've got BTC driving the recent strength. We think that Ethereum might struggle to keep up in a further rally if we do continue to see more upside in crypto, and it's driven by Bitcoin, which it seems to be right now, unless there's some piece of news that hits the tape on Ethereum. But in general, we think Ethereum is going to struggle to keep pace with Bitcoin in the near term. And that's because we are seeing what we call this cool wall of resistance building from a lot of the gamma selling that's been going on in February. So, for those of you who follow me on TradFi stuff, S&P gamma positioning is a big thing that we track and that we keep an eye on. And it often does suppress realized volatility on the S&P and a lot of single stocks as well. But right now, we're seeing a similar sort of setup where Ethereum gamma is really exploding, and in that region of 23 to 2,500, Ethereum's got a lot of long gamma in terms of what the dealers are sitting on, and that might make it hard for Ethereum to rally. Okay, but we're going to look at that in a little bit more detail later on. Okay, term structure wise, we're sliding back into contango. What does that mean? Upward sloping curves. We saw a collapse there of the front. As we mentioned, the weeklies really the only thing getting smacked. Monthlies were relatively stable. So you can see here, weekly vols down around, well, here we got in the front end about 4 vol points showing here. Similar on both Ethereum and Bitcoin. So really the gamma bucket's taking the brunt of it. Vega is quite flat in terms of December options in Bitcoin, unchanged, but long-term Vega a little bit better offered in Ethereum. So that's kind of what we're seeing in the term structures. If we look at it on a relative value basis, not a huge movement in the relative curve, slight bounce, but we're looking at about 0 vol here across the curve, but maybe a little bit of an ETH premium if we go out to 6 months or beyond. It's chopping around a bit, especially the short-dated spread there. But realized vol has stayed firmly in favor of Ethereum with 8 vols on a 10-day and 3 vols on a 30-day. But like I say, because of the gamma positioning, we think that might well change. The spot spread, as we mentioned, has pulled back 13% from its local high. But because we are still optimistic on ETH for this year, we have used that pullback to get into some cool switches, which we'll give you a bit more details of later on. And that it for us, given that the vol spread has pulled all the way back, given that the spot spread has pulled back, if you were looking to get into cool switches, the market's giving you an opportunity right now. So instead of getting scared by the price action, if you were waiting, sitting on your hands, this is the price action that you want to see so you can get into these trades for when ETH does actually then have a story behind it and it does start to outperform, right? Now, it may not outperform in the first month, in the next month. So you might be nervous of Bitcoin outperformance in the in the short dated sort of future. But the way you kind of deal with that is you either go super long dated and super out of the money, so you can stomach that noise, or you neutralize some of your position by having, let's say you have June or September call switches on Ethereum long, short Bitcoin, but you then use 1 month the other way round, long Bitcoin, short Ethereum, to neutralize some of that delta in the near term. So that way you're locking in this really cheap vol spread of close to 0 for that long-term optionality that you have. But you're saying, because I'm not actually sure about the delta working for me in the near term, I'm going to neutralize the delta using the front end. And that's just going to keep things, that means I'm not going to be exposed to that noise in the front end. But once those short-dated options expire, I think there's a good chance that Ethereum starts to outperform, and I've got into that spread at a nice level, basically, right? So that might be one way you want to do that. Okay, SKEW completely flipping back to call premium. So as spot rallied off that support near 38k, you know, the GBTC selling slowed down. The front end of the curve is now back to 2 vol call premium, and it had reached, you know, like about 5-6 vol put premium the previous couple of weeks. So that's a pretty dramatic reversal. Here we got the 1 month. You can see 1 month ETH went from like 4 vols to 1 vol for call, 4 vols for puts to 1 vol for calls. So we're seeing it across the board. Both Ethereum and Bitcoin are moving towards call premium. Bitcoin slightly outperforming it because obviously it is rallying a little bit more. It's rallying a bit harder. But, you know, interesting to see, even though ETH is lagging, even though ETH has seen a load of call selling supply, the SKEW is still moving towards a call premium, even in the short end, right? So it just kind of shows you how much of the SKEW moves in crypto are driven by the speculative spot chasing activity, right? It's a speculative instrument, and when it moves, people pile into the short dated options to chase the move, right? There's not enough structural supply or demand of SKEW to hold SKEW steady for a long period of time. It's very much pushed around by what spot is doing, and so that's, I think, quite interesting to note, because even though we had these call overwriters dominating on Ethereum, that may cap the call SKEW. So if you think about the call overwriters, especially in the front end that just come in size every week, every month, it might be that 1 month call SKEW on ETH isn't going to be allowed to go much above like 2 vols or something like that. Okay. Whereas Bitcoin maybe could go high because it doesn't have as much overwriting. But, you know, that's something remains to be seen. But the fact that ETH SKEW has even gone into a call premium this week with all that flow and spot not really rallying is quite noteworthy, I would say. Okay. Now, one thing also I would say about this is we saw last year there was overwriting constantly throughout the year. But then when there was a strong enough fundamental narrative in ETH, the spot just rallied through the strikes. All these call overwriters had to come back and unwind a lot of their risk. And also the margin requirements going up triggered that as well. So I would say that, yes, it has the ability to suppress ETH vol and drive the implies lower and stop it from realizing. But with a strong enough fundamental reason to break higher, ETH's still going to go, right? This asset is still going to reprice at some point. Okay, it's just the way crypto goes. And those call sellers, if they suddenly need to reverse and buy back their shorts, then vol's going to get an uplift from that, and it could get quite explosive, right? So that those vol dynamics can turn on a dime. We've seen it happen last year, and it's something you need to be aware of before you get too excited and sell loads of upside on Ethereum, I would say. Okay. All right. So that's SKEW. And then jumping over to the dashboards, kind of moving, it was in buy calls, kind of moved to buy put spreads now in Bitcoin. So, you know, if you were looking for hedges, not the worst time. Obviously, Ethereum hasn't rallied as much, so maybe not so much. I mean, I have got hedges on my Bitcoin. I don't have hedges on my ETH. So I am kind of respecting what that strategy compass is saying, to be fair, if you think about it like that. Homing in on the flows, volumes are up about 10% on Bitcoin this week, massively dominated by calls. About 75% of the flow was calls. The large clips were these big buyers of March, 50k calls and 75k calls. Obviously, liking the fact that spot bounced off 38. An interesting trade that I know. So we saw some put sellers on June, which are like underwriters. So in general, March buyers of calls and then sellers of March and June puts. But I think that for me, the most interesting vol trade was this one where client bought the 41k straddles in April and then sold the February strangle against it. And so that's a trade that's basically a calendar long trade, which we've been talking about for the last couple of weeks, right? Buying calendars is a safer way to earn some premium, and the curve's probably going to steepen. But, you know, by homing in on that April bucket, you're basically saying the April bucket's going to hold because of the halving. So the forward vol is going to hold a bit of premium, which it already has started to do. And I'm going to earn theta by being short February. So that's what that vol player has essentially done, right? And we don't think that's a stupid idea at all. And we think that trade probably helped with the contango move that we saw on the surface, on the term structure. Okay, that is the main clips that we saw in Bitcoin. In terms of ETH, similar volume uptick, but really all driven by on-screen volume this time on ETH. The big blocks that traded on ETH were bullish risk reversals in Feb, middle of Feb. That's the 21, 23.50. We saw end of Feb put spread go up, upside calls and call spreads in June and December and March as well in the 3,000 to 4,000 strike zone that was trading there. But the largest volume on ETH was not the block trades. Actually, this time it was the on-screen volume. There was a ton of February 2,400 calls getting sold, 2,500 calls getting sold, and they were covering shorts on the 2,700. So effectively rolling down the short 2,700 strikes to get more premium and basically just stuff the whole Ethereum dealer community in loads of optionality, right? So you can see here these big red blocks kind of showing us where they're selling, and then they're buying back these upside strikes here on 27 and 29. So that was the flow really that was dominating, I would say, in ETH and really driving the short-term vol moves in Ethereum. Okay, and we can see that evidenced in the gamma positioning. So whilst the gamma positioning obviously we had a big January expiry last Friday, there was a big 42K put January in Bitcoin that was providing a load of short gamma. You can see that went away, and since then Bitcoin is kind of trading at around flat or very small short gamma. And you can see we're quite balanced in terms of kind of where we are on different strikes, long shorts, different maturities. So it's a bit of a mess, but nothing really dominating there. Very different picture to Ethereum. You see a massive increase in Ethereum dealer gamma. It's pretty much touching its 3-month highs here. And then where is the strike concentration? It's kind of all coming here on these 3 big strikes, 23 to 24 are the main ones, right? We got a little bit here at 25 as well. And you can see those expiries are February, either the 2nd of February, so this week, or all the way out to February, basically, which means there's a ton of gamma on it, okay? So this amount of long gamma in Ethereum actually is now starting to look material enough that it may have an impact on realized vol, right? Can't always say that, but in the absence of like some really strong Ethereum-specific narrative, it looks like Ethereum is going to be a bit stuck in the mud here in the near term because the dealer gamma has absolutely exploded. Okay, now if we sell off and we move away from that, then fine, that's going to be less important and it's going to not really hold the market on the downside. But on the upside, if Bitcoin continues to rally, I think ETH's really going to struggle to get through this treacle that is all these upside calls creating this cool wall, basically. Okay, so we'll see if that's how it plays out. And we'll see if it's material enough to stop the move. But you know, in the absence of some really strong news on Ethereum, that's kind of how I would expect it to play out in the next week or two. Okay, that's the summary for this week in crypto. Thanks a lot as always. I'll catch you guys later.